Shifting focus now to the technology space, Alibaba is making one of its biggest bets yet on artificial intelligence. The Chinese e-commerce and cloud giant has launched a $10.2 billion share sale to fund AI chips, computing infrastructure and new AI models. The company is issuing new shares at an 8.4% discount to last week's closing price. But the market reaction was sharp. Alibaba shares fell nearly 10% in Monday's Hong Kong trade, as investors focused on the impact of share dilution and whether Alibaba can deliver returns from its massive AI investments. The fundraising is the largest ever follow-on share offering by a Hong Kong-listed company. Despite the sell-off, demand for the share sale has been strong. The offering attracted $28 billion of orders, almost 3 times the amount of Alibaba that it is raising. The fundraising comes just a week after Alibaba reported a 75% drop in quarterly net profit, largely because of higher AI-related spending. The company says its AI investments could break even within 3 years and possibly as soon as 2.5 years. Alibaba's fundraise also highlights the wider AI investment gap between China and the United States. Capital Group estimates that the 5 big US hyperscalers, Microsoft, Amazon, Alphabet, Meta, and Oracle, had combined AI-related capital expenditure of $791 billion as of July 31st. By comparison, China's biggest AI players, ByteDance, Alibaba, Tencent, and Baidu, had spent around $118 billion. US export controls on advanced NVIDIA chips have also forced Chinese companies to develop more efficient models and infrastructure that require less computing power. Alibaba is now trying to turn that constraint into an advantage by developing its own chips, expanding its Qwen AI models, and building AI into its wider business ecosystem. The challenge for investors is whether that spending will translate into sustainable growth and returns.